Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended June 4th, 2017. A finding of manipulation against bullion banks won't stop manipulation. Ex-Deutsche Bank trader pled guilty this week to fraud charges in connection with precious metals market manipulation. Also in the news, Ethereum achieved a 60% market cap versus Bitcoin, and daily Ethereum trading values exceeded Bitcoin on a couple of days last week. Russia to develop a national cryptocurrency, and India settles on a 3% goods and services tax, which is lower than the 5% expected. Top stories of the week. Trump tweets Kofifi. Kathy Gifford shown in photo with beheaded Donald Trump. Bill Maher utters N-word on live TV. James Comey is going to testify about his conversations with Donald Trump. Hillary Clinton emerged and blamed everyone for her loss, and Mr. Met flipped the bird to a fan and lost his job. Now, more important things, in the top economic story, a Deutsche Bank trader pled guilty for fraud in connection with precious metals market manipulation. Now, this trader is going to cooperate and provide evidence against co-defendants. Keep in mind, this is a criminal case. Distinguish this case. This case is brought by the Justice Department, the U.S. Justice Department, and the Commodities Futures Trading Commission. And there's also a companion civil case that Deutsche Bank already settled. Now, Deutsche Bank's alleged co-conspirators, those other bullion banks, they did not settle. And Deutsche Bank, as part of their settlement, is working to provide evidence against them. Okay. So let's break it down so we understand what we're dealing with here. Now, I've done this. There's also some companion if you want to catch up and get more detail. There's a couple of videos here explaining the Deutsche Bank silver manipulation, and then there's this JP Morgan case that also involves manipulation. You can get more of a background if you review those two videos as well. Okay, so you have the Department of Justice bringing this case for manipulation against Deutsche Bank and the CFTC as well. And then you have this companion case where private plaintiffs are suing or have sued Deutsche Bank and other bullion banks for manipulation and harms that they've sustained as a result of that manipulation. JP Morgan's also involved in a similar case. Now, the headline I have is that the manipulation won't stop even if there's a finding against these. Now, why do I say that? I'm going to explain. In the first case, the JP Morgan case, and this is similar to any case, the judge, when he saw the evidence that JP Morgan made a series of uneconomic bids, basically looked like throwing money away, the judge says, well, that's not evidence of manipulation. Now, to the average person, you look at it and you say, looks like it, smells like it to me, but that's not enough in law. It can't just look suspicious. The judge said the plaintiff has to show details on specific trades and names of the counterparties. In other words, there has to be some showing of specificity and intent as to why those trades were intended to manipulate the market. Otherwise, they're just evidence of perhaps bad trades, and the law doesn't punish bad trades. So, why will they find perhaps Deutsche Bank guilty, and in the criminal case, and the plaintiffs be able to win their case? Well, it looks like what Deutsche Bank has is a paper trail that shows intent to manipulate. It shows that they did some spoofing and trades that they were never going to plan to execute to intend to manipulate the market. They front ran their customers' trades, and it looks like they've got evidence that they did this. All right. So you would think, let's say in best case scenario, all three cases, the criminal case against Deutsche Bank, the civil case against Deutsche Bank and the bullion banks, and the civil case against JP Morgan, all go against the bullion banks. Well, the reason they'll go against them is because, hooray, they have evidence. The prosecutors and the plaintiffs have evidence that shows they intended to do these bad things. However, as we mentioned, if a trader wants to engage in manipulation and wants to do naked shorts all day long for the purpose of manipulation, if there is no document, if there are no rogue traders, then they can do it all day long, and there's really no way to find them liable or guilty of manipulation because of this rule. Let me give you an example. This concept comes from a long-standing legal concept of the business judgment rule. The business judgment rule basically says courts are not going to second guess the actions of businessmen. I'll give you an example. Back in the late 80s, Time and Warner were separate entities, and they were going to merge. And they'd agreed on the merger consideration price. And just before they were ready to put the two companies together, Paramount came along and said, whoa, if this happens, we're in trouble. So we're going to make a larger bid, and which the board of directors of both companies rejected it. Now, the plaintiff said, not the plaintiff, yes, the shareholders of the company said, wait a minute, this is not good. We want the Paramount bid. The Paramount bid is higher. And the board rejected it. You said, well, that's breaching their fiduciary duty. They're supposed to get the highest price. Paramount came back after the bid was rejected and threw even more money at the company. And the board rejected the higher bid. So Paramount sued to force the Warner to accept the higher bid. And the court said they don't have to. And you would think, well, wait a minute. If the board is there to maximize shareholder value, are they out of their minds not taking this 25-30% higher bid from Paramount? And what they argued was, look, we're businessmen. We've sat down for a year and we've decided that the synergies between Time and Warner are so great that we can take a lower price than Paramount, because we don't know how it's going to work out with Paramount, but we do know we spent a year, and we've documented this. We spent a year figuring out that this is the best deal for both companies. And the court said, you're right. It's not just about the money and what it looks like. You guys are businessmen, and the reason that the case was rejected, that Paramount lost, was because the companies, Time and Warner, had documented all of their business reasons, and the court's not going to second guess those reasons as to why the merger makes sense. Now, had the two companies just rejected the bid out of hand, that's different. But Time and Warner were able to show that they had carefully considered the bid and that they had been working on a merger for a year, and therefore they were able to reject the Paramount bid. Now, logic makes sense. You would say, well, Time Warner never went anywhere. The price stayed the same for 10 years until they got bought up by AOL, and that ended up being a disaster. Doesn't matter. If a company objectively or subjectively looks like they're doing stupid things, wrong things, courts are not going to intervene. So back to the manipulation case. Even if we get, as I mentioned, a guilty and liable parties out of Deutsche Bank and the bullion banks, that won't stop manipulation. If the real manipulation that takes place is a result of these naked short bombs, you can expect them to continue. You just won't find any evidence that anyone is directing them. And if people suspect that they're government actors, you certainly aren't going to find any evidence. So these naked short selling bombs will continue even after some type of finding of guilt or liability. So what will happen is you'll have Deutsche Bank and the bullion banks maybe pay larger fines. Deutsche Bank didn't pay that much. They paid less to give evidence in the civil case, and the others might have to pay more. And you might get, this trader might end up going to jail. But the bullion banks aren't going to be put out of business. This will be no different than any other finding of manipulation. So all I'm saying is, don't get your hopes up that manipulation is going to stop if there is a criminal conviction in this case. Now, let's move on now to the gold and silver markets. Gold closed up $12.79, up 1%, and silver also closed up 1.2% to $12.52. And the gold-silver ratio still, however, remains around 73 to 1. If you're enjoying these reports and like them to continue, please consider donating to Smaulgld via PayPal or Bitcoin, or becoming a patron via Patreon. Links are below this video and also on the Smaulgld website. And thank you for those who have signed up to be patrons, and also those who have donated from time to time very generously through PayPal and Bitcoin. Let's take a look at some of the tweets of the week. I want to talk about Ethereum versus Bitcoin, and I want to get some thoughts on this. Generally, when I give an opinion, I try not to insist that it is the case, and certainly when it comes to cryptocurrencies, I'm not going to insist anything. I'm going to throw a few ideas out there, just initial ideas. Now, it looks to me like Ethereum is gaining a lot of steam versus Bitcoin, and Ethereum is backed by all the large, not all, but many large corporations. And it has a sense to me of this Microsoft versus Netscape all over again, where Netscape was way out in front, it was the innovator, and then Microsoft came along, copied, made it better, threw a lot of resources behind it, and basically drove Netscape out of business. And I sense somewhat of a Titanic mentality from a lot of people who follow Bitcoin, because they seem to think that Bitcoin is invincible and nothing can stop it. It has network effects, and many companies in the past have had network effects, and eventually that network gets broken. It's possible that Ethereum could break that network. Now, what made me start thinking about this was Roger Ver is a very early Bitcoin adopter. He was called Bitcoin Jesus because he really, really believed and evangelized Bitcoin in its early days back in 2009, 2010. And he's concerned of the high transaction fees now and long delays. And he tweeted about this, about Bitcoin. Now, there's an internal battle amongst developers at Bitcoin, and they're trying to solve this issue. But it looks like, and he writes here, anyone who runs a business using Bitcoin knows that the network is in serious trouble due to congestion. And this doesn't seem to bother a lot of people who own Bitcoin because they're not using it. They don't see this issue. They've got it stuffed in a Coinbase account. They've got it in their own wallet somewhere. They don't care. They just see the price going up. They don't care if it functions because they're not going to use it. They're going to hoard it. And maybe that's okay, but if it doesn't have any functioning or good functioning capabilities as a currency, what is it? You're holding something that doesn't work very well, and you're holding it because presumably it's going to be worth something in the future. So this is, now they say this is going to get sorted out, but that's not a guarantee. There's supposedly, I think June, I don't know the date. Someone can put in the comments below what's supposed to happen with this rift that they're having. But here he says again, many core developers say they like the high fees and transaction backlogs. They have no intention of solving this problem. They're breaking Bitcoin's economic code. And then he mentions another point where he demoed Bitcoin in Zcash, which is another altcoin, for a team at Credit Suisse, and they were much more interested in Zcash because the fees were lower. So Bitcoin's lead and network effects can all be thrown away if this issue, in my opinion, is not settled. And I want to get other opinions, because just because Bitcoin is there first and is doing well and has a higher price doesn't mean it's always going to be there. Then what happened earlier in the week was many of the Chinese exchanges started offering for trade Ethereum. And at one point, Ethereum had, look at this, a higher trading daily volume than Bitcoin, and also the price of Ethereum skyrocketed while Bitcoin's kind of traded within a range. And the market cap of the two, Ethereum is now, today I think it's 55–56% of the market cap of Bitcoin. That's out of nowhere. Anyway, I'd like to get some thoughts on people who like Bitcoin, like Ethereum, like both of them, and get some pros and cons as to what's going to happen going forward. Maybe even get a Smaulgld subscriber to discuss this in an interview. All right, chart of the week, something I talk about all the time. China's total debt to GDP. Look at that. China is a debt monster. I've said a lot about this. People keep insisting they're wonderful because they have gold. They are the United States 2.0. They will build up their gold reserves, but they will also build up their debt. All right. Top stories of the week. Some gold stories. Here's one of these initial coin offerings. 1 gram launches 500 million initial coin offering for gold-backed digital currency. Something that might be of interest. Australian gold output slumps 8% because they had cyclone. Some interesting stories. Who's buying all the gold in India? De-dollarization. Russia and Iran sign oil for goods barter deal. Escape petrodollar. That's from Zero Hedge. Interesting. Goldman Sachs bought Venezuela state oil company bonds last week. Wonder what they're thinking out there. China expands Belt and Road to the Arctic. Now, the economic data wasn't that good. And we'll see later in the week on Friday that jobs data issued by the Bureau of Labor Statistics was not very good, and that gave gold and silver a boost. Personal spending was up, but income was up the same amount. And home prices continued to move up, even though home sales do not. Fed chatter. You're getting all this conflicting stuff from the Fed. John Williams always says they're going to do 4 rate hikes a year. He said that last year they did 1. Now he's saying they're going to do 3. Dallas Fed's Kaplan, I'm more concerned about recent economic data, but he still sees 2 more rate hikes and growth at 2%. None of what the Fed says makes sense. They're projecting low growth. They don't like what they see, but they're going to raise rates anyway. And that ties into my theory. The reason they raise rates is to keep interest in the dollar and treasuries. When you put treasuries on sale by raising rates, people buy them, and we're seeing that. The sales have increased in U.S. treasuries the last 2 or 3 months. Russia has increased their holdings. China, Japan, all increasing their holdings. It may undermine the value of their existing holdings, but they can add new treasuries at a lower price. We're not going to cover the daily sales on the U.S. Mint. During the week we did reports on the U.S. Mint sales of Silver Eagles, which are pretty good, and the U.S. Mint sales of Gold Eagles, which were poor. And then later this week we're going to put out the Gold Buffalo sales, which were equally poor, where we also have the Perth Mint sales coming up for gold and silver. We've got the Kazakhstan report on their reserves. We got Indian silver and gold reports coming up on the imports in April. We also have I'll have a report on the 11 states that have or are planning on or have pending legislation to make gold and silver legal tender and tax-free. So be on the lookout for those during the week. Now, what else we got during the week? We issued our 2017 supply and demand report. You can purchase that on the site or below. There's a link below. And that report's about 33 pages. You'll either get a password protected document or a PDF. Plus, there's a video companion series that goes through all of the data that's included in the report. You can ask questions, and I will follow up in a video if you have any questions, giving answers to any questions that you may have. So if you'd like to buy that, it's available now. Economic data, mortgage applications down. As I mentioned, pending home sales down, even though prices are up. Chicago PMI was a miss during the week. Venezuela had a devaluation. So Venezuela is not doing very well. But here's another one. Moody downgrades China. Wards of fading financial strength as debt mounts. Now, the Fed released its minutes. They're still talking about raising rates. We'll see what happens. I think they'll do one more. I definitely think they'll do one because, back to my theory, also they want the dollar not to fall off the table. So raising rates does put a floor into the dollar. And the dollar has fallen a bit. So they may need to raise rates one more time. And then, of course, again, if the dollar doesn't react to a rate hike. Here is the silver to gold sales ratio. As we talked about, silver sales picked up in May. There's a full report here. I think they sold over 2.4 million American Silver Eagles. Not bad. It's closer to what we've been expecting in recent times. Now, the Challenger had high job cuts. They announced high job cuts, and ADP announces big job gains earlier in the week. Well, it looked like Challenger was right if you compare it to the Bureau of Labor Statistics, because the ADP number didn't even come close. It was 100,000 or more off from what the Bureau of Labor Statistics put out. Construction spending fell. So again, the market, the economy is not robust, solid, never hasn't been for 8 years. And the Fed's still talking about raising rates as if there's some connection between their raising rates and the economy. There's not. They raise rates when they feel that they have to raise rates, and they know they need to raise rates. It has nothing to do with stimulus anymore. Because if they were on the stimulus concept, they wouldn't even be thinking about raising rates, because the first quarter GDP was 1%. Second quarter keeps getting moved down. Things are not accelerating to the point where you need to raise rates to choke off that economic expansion. Here's an interesting one. Hedge funds pile into gold at fastest pace since 2007. Something to keep an eye on. Russia topping up gold reserves, not a priority. Very interesting, because that's what they're doing, but they say it's not a priority. Well, maybe that's semantics. It's not a priority. They're just doing it anyway. Here's Williams, San Francisco Fed president. Bullish on U.S. economy. Sees 3 total rate hikes this year. I think this guy is probably the biggest, I don't want to say joke, but yeah, joke on the Fed. He's always got this sunny outlook, and he wants to raise rates, but then they never raise rates. But he's talking about 3 this year. He's talking about 4 last year, and you know they raised rates once in 2016. Here is the story where the Central Bank of Russia announced they're going to develop a cryptocurrency. I won't go through it. There's all the details here. There's a link at the website, and also a video companion. Here's the link to the story on the Deutsche Bank trader pleading guilty. And here's the economic data on Friday. Very bad. May payrolls, 138,000. March revised down, 50,000. April down to 174. Average hourly earnings, no big increase. So, not much of a good news from March, April, and May on the jobs front. So if you don't have this burgeoning jobs expansion, why is the Fed talking about raising rates? Well, they're talking about raising rates because they have to. On Saturday, yesterday, India settled on a 3% goods and services tax. That's very good news because they expected 5%, and they say this won't have much of an impact on demand. And we'll see April's numbers. I'll have them out later in the week for gold and silver. Silver surprisingly went up on imports, not to where it used to be, but gold is close to 100 tons in April. I'll have charts and analysis later in the week on that. And I believe that's it. If you want to buy gold and silver, please do so. Consider doing so through the Smaulgld site. You can compare pricing and shipping on American Eagles, American Silver and Gold Eagles at BGSC, Golden Eagle Coins, SD Bullion, Money Metals Exchange. There's links below. Smaulgld gets a small commission. I have to disclose that. But if you are interested, you can compare pricing and shipping, and you pay no more, no less than if you visited those sites directly. So please consider supporting the site by making your precious metals purchases through Smaulgld. Also remember to subscribe to Smaulgld up at the top here. Oh, I moved it down because I got the silver report, but there it is. Subscribe there and follow us on Twitter and Facebook. Thank you very much for listening.